guys. You can see time is around 5 5:24. What we can see here is that the last video which I have uploaded 2 weeks ago was weekly trade analysis from 19th to 23rd of May. So what I thought is that let me try to upload a video for the next 2 weeks in a two different videos. I'm going to upload it, guys. It would be from 24th. So 23rd I have uploaded, and it will be from 24th to 30th, and from second to 6th, guys. So this is my weekly trade analysis, which I'll be uploading two separate videos in Bank Nifty trade analysis. So um, let's look into trade analysis from 26th, guys. So as you have seen previously, I have uploaded it on 23rd. So let me continue. It's on 26th. So I had a 2 weeks of break, guys, and after that I'm uploading videos. So please consider. And what you can see here is that if you see this, guys, let's try to put the central pivot range and show daily central pivot ranges. So let's try to mark the central pivot range. And if I would like to mark it from 26th, guys, you can see this is the central pivot range. So let's try to mark this pivot levels. This is the pivot levels, and let's try to lock it. And this is on Tuesday, guys. So let's try to mark this on Tuesday and just lock it. And this is on Wednesday. Okay. This is on. This is an insider pivot range, guys. So you could expect some kind of trend. This is was on Thursday, and this is on Friday, guys. So I think I would be explaining only this many videos. So let's try to mark it, guys. You can see after this kind of huge bullish momentum is, and if you see there was a significant amount of bullishness. So if you look into a 5-minute time frame, what you can see here is that this impulsive momentum broke this 200 moving average, which was previously showing some sort of support here at this 200 moving average. And on the next day, it rejected price from this supply zone over here, or you can consider these 250 levels. And the market rejected price from these levels and continued further selling towards the downside. And you can see a clear break of structure here as well. As soon as the market opened, we can see some kind of rejection of price from these levels, and the market continued towards the downside. And after that, the market retraced price, rejected price from this 200 moving average, and further continuation of price towards the downside. So, and after this, the market was trading below this 200 moving average only. But you can see here what happened is that the market, after this kind of huge bullish momentum is, what you can see is to mark the last down candle before it moved towards the upside. So what you can consider is this is the last down candle. Guys. So if you consider this candle over here, and if you try to mark and extend it towards the right side, and you can consider this to be a point of interest. So you can see the market here, the market came over here at these demand levels, and the market failed to make a lower low here. Previously, you can see the market here failed to make a lower low. Instead, the market showed some kind of aggressive momentum and broke structure towards the upside. And you can see a clear market structure shift over here, guys, where the market very aggressively broke this structure towards the upside. This was on 22nd. So you can see a clear break of structure over here. And after this break of structure, you can see the market taking support from this 200 moving average over here and continuing further bullish. So what we could have looked for is the market continuing bullish only, guys. You can see in a 5-minute time frame is always consider 200 moving average in a 5-minute as well as in a 15-minute time frame is. So in both 5 and 15 minutes, in case if the market is trading above this 200 moving average, that's when you need to consider the market sentiment to go bullish. So you can see this is the 200 moving average over here in a 15-minute time frame. So let's mark this 200 moving average in a 15 minutes time frame. And if you see here, in even in a 5-minute time frame also, guys, it the 200 moving average here lies almost same over here. And you can see this kind of huge impulsive momentum. Again, the market took support from these levels and this rejection of price from this 200 moving average, this 20 moving average, and we formed a bullish engulfing pattern over here. You can see this bullish engulfing candle as well as the 200 moving average support over here. clearly signifying some sort of bullishness. And you can see after this, the market tried to hit higher. And after this kind of huge bullish momentum, the market retraced the 50 levels over here. You can see the last down candle before the market moved up. You can see the market coming all the way to 50 levels and continuing further bullish. So in case if you try to plot the fib extension levels over here, so the common point between this to the common point between this to the common point between this. So you could have targeted the 100% move over here. And you can see the market came all the way to this 1.68 level, rejected price from these levels and continued further page. So let's look into a smaller time frame analysis and see how the market here behaves. So if you look for here, there is definitely some fair value gap over here. You can see where price has not yet mitigated, or you can consider this to be some sell side, buy side liquidity over here. So definitely you can expect some kind of momentum over here. So this is one buy side liquidity, and this is another buy side liquidity over here. So if you see here, so what we could have just plotted is this buy side liquidity over here. Buy side liquidity is nothing but buy stops and stop order sales. So the people who want might expect the market to come and reject price from these levels will sell their positions over here. Uh, these are the uh, option sellers guys. Whenever these option sellers whenever they will buy guys, these are the buy stops for them. And for option buyers to it, they might have placed their stop orders here, stop loss here, and expecting the market to move further downside. And you can see the market coming and mitigating that buy side liquidity. And once this liquidity has been swept guys, what we need to see here is that the market is showing some breakout structure over here. So what you can see here is that here the market swept this liquidity, but here the market failed to sweep this liquidity, right? So let's look into a 1 minute time frame and see how the market here is behaving. So what you can see here is that the first thing what we can see here is that the market showing some kind of bullish momentum. You can see the clear market structure shift, or you can see the you can consider this to be a market structure shift house. Or if you look into a 1 minute time frame, you can see clearly this momentum over here, where clearly the market broke the structure towards the upside in a smaller time frame, and again retraced to 50 levels and continued further bullish. So this is in a 5 minute time frame as well. You can see the market breaking the structure, again retesting these levels and continuing further bullish. So let's look into 28th trade analysis, and this is the pivot level size on 28th of May. So what we usually do is to mark the mid of the first candle. So let's usually mark this mid of the first candle is. So this is the green zone over here. And what is next thing is to mark the 5 minute zone as well. So let's try to mark the 5 minute zone as well. This is the 5 minute zone. So what you can see here is that we try to extend over here. So if you try to extend over here, guys, what you can see here is that the market showed a huge bullish sentiment. But in case if the market sentiment would have been bullish, guys, the market would have clearly broke these levels over here. But what happened is that as soon as the market reached this level size over here, the 55,800 levels or 55,850 levels, you can see there is some sort of narrow consolidation. So either you could have expected the market to sweep this liquidity. You can see this equal liquidity over here. Sweep this liquidity over here since there is a fair value gap over here. So the market would have swept this liquidity and continued further bullish. But what happened here is that the market over here failed to make an higher high. This is a low resistance liquidity event. So since the market failed to make an higher high, this is not a strong supply zone risk. If the market would have swept this liquidity above these levels and reaching the higher time frame levels, rejection of price from these levels and continued further bearish as the market here broke structure towards the downside. You can see a clear break of structure here. The last support has been broken this. So a clear break of structure, or you can consider here the first drop formation over here. So the market swept this liquidity. In case if the market sentiment would have been bearish after this kind of huge bullish momentum, the market would have swept this liquidity, rejected price from these levels and clearly showed some kind of bullish momentum. But you can see here this huge bearish momentum which actually broke this structure towards the downside. And in case if the market has to grab this liquidity over here, the market would have rejected price from these levels, the fair value cap over here, and continued further bullish. But what happened is that after this kind of huge bullish momentum, the market retraced here, but rejected price from this 21 moving average, the red color line over here. And in case if you try to plot the anchor gap level, so the anchor gap level is trading above as well. So if you try to plot the common point between this to the common point between this, so what you can see is that the market here rejecting price from 0.38 level, as well as the 21 moving average price rejection over here. You can see the 0.38 level price rejection over here. So after this kind of rejection wave, the market clearly broke another structure towards the downside. So you can see here a clear break of structure here as well after the initial shock formation. So here is another impulsive downward momentum where the market broke structure towards the downside. And in case if you try to plot the high to low of this candle, you can see the market reaching and retracing back to this optimum trade entry zone over here. This is the optimum trade entry zone where the price reach reach here. So you can see price over here where the market retraced to this optimum trade entry zone, and retracing to this optimum parent also and rejecting price from these levels and continuing bearish also. So either you could have taken this position at 0.38 level, or after this neckline getting broken down, you could have taken short position keeping a stop loss just above this candle, or after this kind of break of structure, you could have waited for retracement guys. And once if this level has been broken, it could have taken the anchor gap level over here. And with this candle or anywhere along these levels is where you could have entered short position here guys, keeping your stop loss just above this candle itself and targeting it all the way towards the downside. So in case if you try to plot the fib extension levels over here, the common point we can use to the low of this candle over here to the high of this candle over here, right? So in case if you try to plot here, we could have targeted it all the way to 4.267. You can see guys how beautifully the market came all the way to 4.26 with a clear rejection of price from these levels. So this is how you could have clearly taken short position and targeting it all the way to this levels, right? So what you can see here is that after this kind of huge bullish momentum is, a lot of buyers might have entered expecting the market to go further bullish, since the market has reached a significant area over here, since this is a fair value gap over here. So what you could have expected is that the price coming all the way to these levels, we're mitigating this fair value gap, and you can see the market didn't even close below this fair value gap and showed some kind of bullish momentum over here. But and a lot of retail traders might have think after this kind of huge bullish momentum, the market clearly broke this structure also here, clearly signifying a clear break of structure. So you can see this is the last up move before it broke structure, and the market retraced here and a clear break of structure over here, or you can consider this to be a instant shock formation over here. So what you could see, and the market retracing back to 350 levels over here. So if you consider the last down candle to the last up move, what you can see here is that the market retracing back to this 350 levels. So market coming, and what it would have, what a lot of retail traders or inexperienced traders might happen is that the market reaching a significant fair value gap over here from the chalk over here, retracing to 50 levels and expecting the market to go further bullish. This is usually what a lot of retail traders might have expected. But for you guys, what I'm teaching you is that during this kind of situation, guys, even during for me also, sometimes even I also feel quite biased whether the market is behaving in a certain way as what I have expected. So what I would always recommend you to do is that in case guys, if you try to plot these levels over here, once the market closes below this neckline or the zero point 0.5 levels, the market shows some kind of bearish momentum, only then you can consider taking short position, keeping your stop loss just above this candle, guys. So what I am telling you is that, so in case if you consider this momentum over here, so once after this kind of huge bearish candle, here is where you could have taken short position, keeping your stop loss or this bearish momentum, keeping your stop loss just above that candle or even this momentum over here. And that's where you could have entered, guys. So in case of the market trying to take support here and breaking this neckline, that's when once the neckline has been broken here, that's where you could have expected the market to go long position, since you are expecting the market to come to 50 levels, break this neckline and continue further bullish. So even though you might not have entered a position here, in case if you might have entered a position during neckline also, you could have captured a significant momentum here, right? So that's very important than risking a lot of capital over here. Better you take a short trade over here, and once if the market is moving in your direction, that's when you add on to your position. And if you're in this case, when your market sentiment is bearish phase, that's when you need to add on to your position to losing trades. But based upon candlestick psychology, what I would like to tell you here is that you can see this kind of bearish candle over here, guys. This bearish candles swept these previous two candles. You can see the previous two candles, right? The market swept this liquidity. rejecting price from this 21 moving average and closed within this zone, guys. So this one candle over here played a very significant role, and the market tapped this fair value gap over here since the market here shows some kind of liquidity over here. So swept this liquidity, reached this fair value gap, rejection of price from this 21 moving average and closed within this zone. After seeing this kind of bearish candle, also you could have entered short position, expecting the market to go further bearish. Or in case if you might have missed out on this trade, guys, what you could have seen here is that after this rejection of price, the market again clearly broke structure towards the downside. You can see a clear break of structure. After this breakout structure, what you could have done is to plot the fib levels over here, the high to low of this candle over here. And you can see the market retracing back to 0.38 level over here, rejecting price from this 0.38 level and continuing further bearish. So this is another trade position where you could have entered your position over here and keeping your stop loss just above that candle and targeting it towards the downside. So this was one beautiful trade setup where you could have just holded on to your trade and made a significant amount of profit. And what you could see here is that this is the last down candle, guys, before it broke structure. And you can see when the market reaching the pivot levels over here, this is the pivot range, right? After this, the market showed some kind of momentum towards the upside. You can see immediately the market swept this liquidity, and you can see this liquidity over here, guys. The market swept this liquidity and closed within this range, and after that, it shows some kind of bullish sentiment over here. And you can see with this sweep over here is where the market clearly found a chalk over here, and this is the first chalk formation, and this is the last down candle before it moved towards the upside. So what you can consider is to mark the 50 levels over here, or this is the order block level. So this is a 1 minute order block. So you can see after this, the market came all the way, mitigated this order block level since there was a fair value gap over here. So the market had to come mitigate this order block level. And we can see even though the market here broke the structure, guys, this demand over here is not strong enough. So what you could have expected after this, the market reached this 1 minute order block and rejected price and closed within this range, guys. You can see another sweep of liquidity over here where the market rejected price and struck liquidity. We can consider this sweep over here, rejecting price and closed within this range, guys, showing some kind of momentum. So what you could have targeted is the next buy side liquidity over here. So this is another next buy side liquidity for initial target. So this is another buy side liquidity, or you can consider this fair value gap over here. That's where the market came over here, uh, tabbed this fair value gap, rejected price from this levels, and continued further bearish. And you can see how the market continued in the sideways manner. So I'm not trying to teach you as previously, which I used to teach you each and every momentum, guys. So you could have captured by the way I teach, guys. You could have captured each and every trade, but I don't want to teach you that, guys. I'm teaching you based on how I usually take trades, and I maximum take 3 trades a day, guys, and usually a one trade or 2 trades. And if my targets are in done, guys, I will be not taking the third trade. You could see rejection of price from these levels, and you could have taken long position over here, keeping your stop loss just below this registered candle and targeting all the buy side liquidity over here. This was another trade setup where we could have easily taken. After this, the market failed to make a lower low, and instead the market broke structure towards the downside. And you can see how the market trying to move in a sideways manner, guys. Usually try to take your trades during the morning itself, guys, so you can expect some kind of good momentum during the first half of the day. And in case if you find such good momentums during the first half of the day, you can take second trades as well. And what I can see here is that you can see this kind of huge bullish momentum over here, guys, going to previous data. And if you try to plot the last down candle before it broke structure towards the upside, so this is the last down candle before it broke structure towards the upside. So what we could have expected is that the market coming and tapping this liquidity over here, this fair value gap, or you can consider there is some sort of fair value gap over here. So coming to the next day, guys, what happened here? This was one trade setup where you could have taken. This is another trade setup where you could have taken. So coming to Tuesday on 27th of May, what we can usually do is to mark the mid of the first candle. So this is the mid of the first candle, is the low to high of this candle. So let's try to mark the mid of the first candle as well as the 5 minute zone as well. So from high of this candle to the high to this zone over here. So this is the 5 minute zone, guys. 5 minute zone over here. So what you can see here is that in a 1 minute time frame, guys, you can see Yesterday, the market showed some kind of bearish momentum, a huge aggressive selling towards the downside. And after that, the market tried consolidating in a sideways manner throughout the day with no significant bearish momentum. And the next day, guys, the same bearish momentum continued as the market gapped down. The market gapped down below this 200 moving average, below yesterday's VWAP level, as well as below the pivot levels, guys. And you can see whenever you find a narrow pivot range, you can expect the market sentiment to be a very good trend day over here. So what you could have seen here is that the market gapped down and showed some kind of rejection of price from these levels and continued further bearish. So in case, as soon as you see this kind of huge bearish momentum, is where you could have taken short positions over here and made a decent profit, guys, towards the downside. And what you could have looked for is a significant demand zone over here. And you can see if you look into a higher time frame, it's like in a 5 minute time frame, and let me like mark it a last down candle before it broke structure towards the downside. So let's take this out, guys. So what you can see here is that this is the last down candle before the market broke structure towards the upside. So always respect the high time frame order block size. So you can see how the market came all the way to this 5 minute order block, rejecting price from these levels where the market failed to make a lower low here, consolidated and formed a rounding bottom pattern over here. You can see over here formed a rounding pattern and showed some kind of significant bullish momentum. So what you could have marked is a significant demand zone over here and the market sentiment being bearish, and you could have expected the market to come all the way to this levels, keeping the stop loss just above this candle and targeting all the way to this 5 minute order. This was one significant trade opportunity where you could have taken this. Or what you could have done is to mark the daily gap level over here. So let's try to mark the daily gap level over here. So here you have marked the gap level and you can see a significant downward momentum over here. So what we could have done is the last up candle before it broke structure. You can see the market rejecting price on this daily gap level. So what you could have done is that after this kind of huge bearish momentum is where you could have entered another short position over here, keeping a stop loss just above the candle. That price reacting from this daily gap level, and you could have targeted this by sell side liquidity over here. You can see this is one sell side liquidity where you could have easily targeted and another short position. Easily you could have taken one short position over here, another short position over here, guys. And you can see after this, the market showed some kind of bullish momentum, failed to make a lower low. Instead, the market broke structure towards the upside. But the market is trading below the 50 levels of this bearish momentum towards the downside. And if you consider this huge bearish momentum, is the common point within this, the common point within this, you can see the market is trading below these 50 levels over here as well. This is the 0.5 level, 5 level over here. So you can see clearly the market is trading below this zone only, clearly indicating the market sentiment is bearish. But what happened here is that you can see a huge impulsive momentum towards the upside, guys. A very strong impulsive buying pressure over here. You can see clearly the market showed a bullish sentiment and market structure shift over here, showing a very good demand over here, guys. So you can see how the market came all the way to this Monday's VWAP level, as well as the 5 minute zone and the mid of the first candle, rejected price from these levels and continued further bearish. So what you could have done is to plot the anchor VWAP level over here and see some sort of support over here. Definitely the market is showing some sort of support. But in case if you might have failed to enter the trade over here, what you can see here is that clearly the market broke the structure over here, a clear break of structure levels. You can see over here. And this breakout structure is considered here also. You can see here the market broke this structure, but came all the way back to this order block level over here, which is a clear 1 minute order mark, failed to make a low low. Instead, the market showed some kind of bullish momentum and reached all the way to this 5 minute zone. After that, the market again retraced this. So in case if you might have missed and failed to capture this momentum in here, definitely you could have easily captured this momentum as the compound values, so the compound right. And you can see the market retracing all the way to this 550 levels over here. This is the 550 level where the market came and retraced all the way to this levels over here. And you can see how the market came all the way to this 550 levels. So in case if you try to plot different extension levels, guys, the common point within this to the common point within this to the common point within this, so you could have easily targeted the 1.68 level, or in case after this 1.68 level is where you could have captured the 0.5 levels. Or you could have easily taken long position over here, right? Keeping your stop loss and trailing it all the way towards the upside. So it could have easily kept below this 21 moving average and targeted it all the way to 1.6 level. So this was one trade opportunity. I didn't ask you to take your position over here, guys, but definitely you could have either take your position. I have marked this 1 minute on a block percent, but definitely you could have captured this momentum after this kind of huge bullish candle also. Expect keeping a stop loss just below that candle and targeting it all the way towards the upside. And after this kind of huge bullish momentum, we can see how the market showing some sort of bearishness, but here the market failed to make a higher high. But with this momentum, guys, clearly the market broke this low. But taking support from this pivot, this day VWAP level, and showed some kind of bullish momentum. But here the market failed to make an higher, failed to cross above these levels. Instead, the market formed some sort of resistance at this level over here. This is the last up move before it broke structure towards the downside. You can see a clear break of structure here. You can see this kind of clear break of structure over here. Can see a clear break of structure over here and the last up move before it broke structure towards the downside, and this is the last up move before it broke structure towards the downside. You can see the market coming, mitigating these levels, rejecting price on these levels and continue further bearish. So either you could have entered in this short position after this kind of huge big candle over here, rejecting price on these levels and continue further bearish. Either you could have kept your stop loss above this candle and targeting it all the way to this 1 minute order block levels. Yes. So or in case if you could try to plot the fib extension levels over here. So the common point in this to the common point in this to the common point in this. So what you could have targeted is all the way to this 1.68 level. You can see the market coming all the way to 1.68 level. So this is how you could have easily targeted it. So this momentum towards the downside is where you could have capture. So this is one trade opportunity where you could have taken. So I hope you're understanding it. Here I have given two trade opportunities where you could have taken. This is one another trade opportunity where you could have taken. Here the market showing some sort of demand and show some kind of bullish momentum. But the market again retraced, but here the market failed to make a higher high. Instead, the market broke the structure towards the downside. Is where you could have exited your long position in case if you might have holded on, or you might have entered longs over here. A sort of retail traders might have entered long over here, keeping a stop loss just above this candle since the market came to this demand zone over here. And we could have expected the market to continue further bullish, reaching all the way to this levels and continue like this. But here the market sentiment was not in a clear one directional. So the market has to target all those buyers who might have entered here, and you can see the momentum towards the downside. How the market targeted all those buyers who might have entered here after this kind of huge aggressive momentum towards the upside. And this is about my trade analysis on Tuesday, guys. So let's look into Wednesday's trade analysis. So after a narrow pivot range, guys, and the next day you can see there is some wide pivot range, and you can expect some kind of uh, not so momentum on this days, guys. You can see how the market consolidated between the previous days ranges only. So if you try to mark the previous days high and low, you can see how the market consolidated between those yesterday's previous day high and low. Since yesterday the market showed a huge bullish positive momentum either towards the up or towards the downside. So let's look into uh, trade analysis, guys. So if you mark the mid of the first candle on Wednesday, they go to high of this candle. So let's try to mark the mid of the first candle. So let's try to mark the zero point 0.5 levels. And after this, let's try to mark the 5 minute zone as well. So in case if you try to mark the 5 minute zone, the low of this candle to the high of this candle. So this is the 5 minute zone as well, guys. So let's try to mark this 5 minute zone as well. You can see the market over here, guys, showed some kind of bullish momentum, rejected price from this previous supply zone over here, and continued further bearish also. You can see a clear break of structure over here. You can see a clear break of structure, guys. After this kind of break of structure, you can see again the market retraced to this optimum trade entry zone, or if you consider the common point index to the common point index, the market again reached this optimum trade entry zone. Rejection of price from these levels and continued further bearish, but the market here failed to make a lower low. Or you can see the market here, guys, failed to make a lower low. Instead, the market again showed some kind of bullish sentiment where the market clearly broke this previous structure high also. You can see a clear break of structure over here, and you can see a significant bullish momentum even after this kind of huge bearish kind of formation over here. A significant buying pressure over here, where the market after this kind of big selling pressure failed to make a level in. So the market came all the way to these levels over here, guys. Or what you can see here is that there is no clear directional bias, guys. But what we can remember is that if you consider this kind of huge bullish momentum towards the upside, where the market broke this previous structure high, 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 or you can consider this liquidity levels also. So if you consider the count point between this to the count point between this, you can see the market reaching all the way to these fair value gaps or the optimum trade entry zones, right? You can see this is one fair value gap where the market had to come mitigate these levels over here. So fair value gap over here. So if you ask me to zoom in guys, the market swept this previous two candles liquidity levels over here. You can see a clear sell side liquidity sweep over here. Liquidity swept the previous low, the previous candle goes, uh, came to this fair value gap over here, rejected price on these levels and continued further bullish. So this is where you could have easily entered long position. And in case of you try to plot the anchor gap level over here, what you can see here is that this is the anchor gap level. And what exactly you can see is that the market broke this previous high over here. Again, the market retraced to this 250 levels. So if you consider the low to high of this candle over here, you can see the market reaching all the way to 0.38 level over here. You can see the clear 0.38 level where price is reaching. And after rejection of price from these levels, and you can see here the market rejecting price from the 21 moving average 0.38 level as well as the anchor gap level over here, clearly signifying some sort of strong support. You could have easily entered long position over here, keeping the stop loss just below this candle and targeting it all the way to this buy side liquidity over here. So you could have targeted it all the way to this buy side liquidity or this buy side liquidity, or you could have targeted it towards the upside as well, or you could have tried your stop loss all the way to these levels also. So this was one trade opportunity where we could have taken since the market is in a sideways manner. Either the market has to be trading above the pivot levels. As you can see, the pivot level is here, the market is trading over here. So the market coming and reaching all the way to these pivot levels, and the market here, the pivot levels here, the market going against the pivot levels. But you can see on Wednesday, the market is moving up and below the pivot levels, clearly signifying that the market sentiment is not so bullish, not so bearish, and the market is moving in a sideways manner. Since yesterday, the market showing some kind of bullish momentum, the market gapped up, targeting all those sellers who might have entered here, right? So you can see since from 2 days, a lot of sellers might have entered, expecting the market to continue further. But with this gap up price, a lot of sellers might have exited their positions, and a lot of buyers might have entered, expecting the market to go further higher. Since you can see the market gapped up over here, so a lot of buyers might have entered this position, expecting the market to continue further bullish. But what happened here is that the market clearly broke this low also. You can see the first candle's low has been broken, clearly changing the market sentiment from being bullish to bearish, guys, even though the market gapped up. And since it was Thursday, guys, you can expect some kind of manipulation in markets. And whenever you find such sort of manipulation, guys, the market is either targeting either buyers or the sellers. So on Thursday, though, definitely you can expect some kind of manipulation. And this is what the manipulation is, guys. Even though the market gapped up and the market gapping up above the pivot levels over here, this is the Monday's pivot level, guys. So even though the market gap up above the Monday's pivot level and above the 200 moving average over here and above the 9 as well as the 20 moving average, clearly signifying the market sentiment to be bullish, guys. So if you ask me to mark the mid of the first candle, so if you consider the low to high of this candle, and if you ask me to mark the mid of the first candle, so this is the mid of the first candle, guys. And what about 5 minutes zone also? So let's mark this 5 minutes zone as well. So if you mark this high to low, this is the 5 minutes zone. So during expiry days, guys, always be ready that you can expect some sort of manipulation. So this is the 5 minutes zone. So what you can see here is that after the gap up price, in case that the market sentiment would have been bullish, the market would have rejected price from the 9 moving average, uh, and definitely not this kind of huge bearish kind of levels. So whenever if the market trading above the 200 moving average, above the Monday's pivot levels, as well as above the base pivot level, you can see the market would have rejected price from these levels. And after this reaching these 5 minutes on this, the market will have shown some kind of huge bullish candle over here. and expecting the market to go further bullish, but instead market broke towards the downside, breaking the first candle's low here, and clearly signifying that the market sentiment is bearish and clearly break of structure towards the downside. So after this, the market again broke structure towards the downside. As you can see, another break of structure over here. You can see a clear break of structure, and after this break of structure, the last up candle before it broke structure towards the downside is this up over here. So you can consider this to be a 1 minute order block. So what you can see here is that after the market reaching this 1 minute order block level size, you can see clearly the market here failed to make a lower low. You can see the market failed to make a lower low, but this kind of bullish momentum, even though the market broke this previous swing over here, guys, the previous high here the market broke, even though the market broke this high over here, a clear break of structure over here. But what we need to see here is that the market broke this structure only to reach the significant liquidity levels over here. You can see this is the day VWAP level. So the market reached all the way to this 1 minute order block as well as the day VWAP level, rejected price on these levels and continued further bearishness. So what you can do is to mark the Fib extension levels, the component in this to the swing low to swing high over here. So what you could have easily targeted the 1.68 level over here, guys. Or you can see in case if you try to plot the mid of the 1.68 level as well as the 2.6 level, you can see that is almost coming midway between the 1.68 and 2.61 level as well. So either we could have expected the market to reach all the way to this level as well. So you can see the market reaching significant supply zone over here. Short position over here is keeping a stop loss just above this VWAP level. This VWAP level is a very significant supply zone is during after the initial bearish momentum, which I have already mentioned to you also. You can see here as well where the market is rejecting price from the VWAP level and the rejection of price from this VWAP level and continuing for the bearish. So this is where we could have taken short position and we could have targeted it all the way to the liquidity levels over here. You can see a clear sell side liquidity over here, where the market came, rejected price from this sell side liquidity and grabbed all the momentum and continued further bullish guys. So I hope you're understanding guys. So this is a clear 1 minute order block. So in case if the market has not yet mitigated, now the market has mitigated it. Previously the market hasn't mitigated these levels, came all the way. So that's what the market came, mitigated these levels, and you could have targeted it all the way towards this 1 minute order block guys. And this sell side liquidity as well. So you could have capture this kind of huge bearish momentum towards the downside. After this, you can see a clear market structure shift over here, the huge bullish momentum. You can see guys, a clear market structure shift over here, where the market swept this liquidity below and immediately shows some kind of bullish momentum, and the market is trading above these levels over here. So if you consider the power point in this to the power point in this, what you can see is the market 50 levels over here. This is the 50 levels. And you can see clearly the market consolidating above these 50 levels. After this, even though the market came all the way, mitigated these levels over here, guys. And if you try to plot the anchor graph level over here, what you can see here is that even though the market showed a huge bullish uh, rejecting price from these levels, or you can see the previous candles over here, guys. The previous 1, 2, 3, 4, 5, 6 candles, previous low, the market swept and closed within this range. This is a clear sign of the demand over here. This is what I'm asking you to identify in candlestick size. Whenever you identify this kind of sweep pattern over here, where the market swept this previous low liquidity and the market reaching a significant demand zone over here, where the market swept this previous liquidity swept and closed within this range, clearly signifying some sort of bullishness. That's when you could have taken long position over here, keeping a stop loss just below this candle itself and targeting it all the way towards the upside. And for target levels, you could have easily plotted the Fib extension levels over here. So in case if you try to plot the Fib extension levels over here, the common point between this to the common point between this to the common point between this. So what you could have targeted, as you can see, you could have just hold it on to your trade throughout the days, and you can see how the market came all the way trading above this all the levels and breaking all the levels over here. So you could have targeted even these levels over here. So this was one significant trade opportunity where you could have taken. and made a very decent profit in that momentum as well, guys. So that's about Thursday trade analysis, and you could have easily captured a beautiful two trade setups towards the downside and towards the upside. Since throughout the day there was no momentum towards the upside, guys, and since it was an expiry day, after 2:30 is where you could have expected the market to head towards the bullish side, and you can see throughout the day, guys, there is no upward momentum only. Only you can see this one momentum, which was not as significant when compared to this downward momentum in the market consolidating throughout the way towards the downside. And this is where you could have easily expected the market to go further bullish after 2:30, guys. This is where you could have expected a hero zero trade and you could have made a decent profit with this kind of huge upward momentum. So that's about Thursday's trade analysis, guys. So let's look into Friday as well. So for Friday, guys, what we need to see is that yesterday the market showed a very good positive bullish momentum during the second half of the day, clearly signifying that the market sentiment is clearly bullish. But the market has to come and reach this optimum trade entry zones or the after this kind of huge bullish momentum. Guys. So is that what you can see here is that the market over here, the last down candle to the last up candle, you can see the market reaching all the way to 50 levels over here. So let's not consider this. What we need to see is the market reaching the optimum trade entry levels over here. You can see clearly the market here taking support from the 200 moving average as well as the weekly pivot levels, a VWAP level. So let's zoom into this trade and look and analyze how exactly we could have taken this trade as well. So let's try to mark the mid of the first candle. So the last up candle, the last down candle. So let's try to mark the mid of the first candle, so 0.5 level as far as the 5 minute zone as well. Let's try to mark the 5 minute zone as well. So this is the 5 minute zone. So what you can see here is that the market is taking support from pivot levels. This is the pivot range. So what we could have seen here is that even though the market took support from these pivot levels, guys, and showing some kind of significant bullish momentum, the market failed to break above this first candle's high, clearly showing that the market sentiment is not as strong when compared to our sentiment, guys, where we could have expected the market to go further bullish. So either in case if the market sentiment would have been bullish, the market taking support from these levels clearly broke the first mid of the first candle, retracing back to this 5 minute zone and continuing further bullish. But here you can see the market initially failed to cross above the mid of the first candle, above the high of the first candle, and the market rejecting price on this 5 minute zone failed to make an higher high. You can see clearly this is a low resistance liquidity zone where the market failed to make an higher high. Instead, the market significantly with a strong bearish momentum with a fair value gap broke structure towards the downside, and it is a clear market structure shift over here. So after this kind of bearish momentum, where this candle over here, guys, this huge bearish candle failed to make an higher high, but broke the structure towards the downside, breaking the 921, the day VWAP level, the 5 minute zone towards the downside, clearly signifying that the market sentiment is bearish. And if you try to block the high and low of this candle, you can see the market retracing all the way to 0.38 level over here, rejecting price from these levels and continuing further bearish rise. So this is where you could have easily entered short position. So this is the 0.38 level where the market came, rejected at these levels multiple times, guys, and continued further bearish. So what we could have done is to plot the fib extension levels over here. So the common point between this to the common point between this to the common point between this, guys. So what we could have targeted is the 100% move over here. So this is where we could have easily captured over here, guys. So you can see this 100% move is where we could have easily targeted, keeping your stop loss just above this candle. Short position over here, guys. Keeping your stop loss just above this candle itself and targeting it all the way towards the downside. The 100% is where you could have targeted. So this was an one trade opportunity where you could have taken. And you can see after this, the market clearly broke this level, but clearly the market again found a market structure shift over here. Even though the market sentiment is clearly bearish with a huge bearish momentum, the market showed some kind of huge upward momentum towards the upside. You can see a clear market structure shift, and there is a fair value gap over here. So the market came mitigated this fair value gap. I hope you're understanding guys what I'm saying. The market showed some kind of bullish momentum. Market reached all the way to this fair value gap over here. But before that, the market here formed another break of structure or a chop formation over here. And after that, the market, if you consider this common point within this, so the common point within this, the market reaching the optimum trade entry zone over here. So reaching all the way to this fair value gaps and continuing further bullish. So you can see the market showing some sort of bullish momentum over here. So either you could have taken position over here itself, guys, or in case you can see this kind of huge bullish momentum candle over here where the market is showing some significant bullish pressure over here. Or in case if you might have missed out on this guys, you can see clearly the market found another break of structure here. So if you consider this impulsive momentum towards the upside, the last down candle to the last up candle, either the market retraced to 0.38 level guys, showing a huge bullish momentum. So what you could have done is to see significant buying opportunities, or what you could have done is guys, if you try to mark the low to high of this candle, you could have either mark the optimum trade entry zone over here. You can see a clear optimum trade entry zone, which is overlapping with fair value gap. So once this optimum trade entry zone, the market showing some significant support over here, where the market here failed to make a lower low over here. Instead, the market broke structure is where you could have easily entered long position over here, keeping your stop loss just below this candle and targeting it all the way towards the upside. So below this candle is where you could have taken, keeping your stop loss just below this candle and targeting all those low resistance liquidity run levels. So if either you could have targeted this or this level also. So you could have made a decent profit capturing this momentum towards the upside. So that is what is needed, guys. A beautiful trade opportunity where the market over here, the fair value gap, the optimum trade entry zone, the market reaching over here, failed to make a lower low. Instead, the market broke structure towards the upside and clearly showing a very good upward momentum, showing a good impulsive momentum, guys. I hope you understand, guys. So this is my trade analysis from 26th to 30th of May, guys. So I hope you're understanding. In case if you find my videos helpful, guys, please like, share, and comment and share with your friends and family and keep supporting my channels. Thank you.